Hello and welcome to NDTV Profit. Joining us today is Mr. Sudhir Singh. He is the CEO of Coforge. He's speaking to us a day after the company's third quarter earnings, where the revenue rose 1.8% in constant currency terms. The EBIT margin expanded by 196 basis points to 13.5, while net profit jumped by almost a third to about 240 crores. Mr. Singh, welcome to NDTV Profit.
Thank you. It's a pleasure to be here.
Stellar set of numbers, as we can see. So that also in a seasonally weak quarter, sir. So can you tell us, has the seasonality affected you in some way? Has there been impact of the furloughs on your earnings in the third quarter?
It has been. This was a pretty tough quarter because furloughs this time were very, very significant. And if I were to even contrast them to just over the last couple of years, they've been significantly higher. The revenue growth has come largely off the back of the ability to execute against plans and also off the back of the large deals that we've been signing on a consistent basis. But furloughs did affect us through the quarter.
Okay. We also see that you have a very healthy order book. Correct me if I'm not wrong, you have clocked about 8th straight quarter of $300 million deal wins in the October-December period. So what does the executable order book look like at this point of time? And have the deals actually started to meaningfully convert into revenues?
They have. If you look at us, and it's not just 8 quarters, as you rightly said, of $300 million plus deals. What's always marked us out is when we do talk about large deals, we follow that up with revenue growth in the subsequent quarters. So as we look at our current pipeline, we feel very good. We feel very confident about the fact that the deal velocity is likely to sustain and that it will continue to drive growth for us. If you look at our results at the end of the first 3 quarters, year to date, end of the first 3 quarters, we are growing 14.7%. This is constant currency growth. This is all organic growth. So we're doing that currently off the back of the large deals that we have been signing. This year, we've already signed 8 large deals. Last quarter, quarter 3, seasonally weak quarter, we've signed 3 large deals. So I expect the large deal velocity will sustain given the pipeline that we're looking at right now.
What is the size of the executable order book, sir, if you can give us some color on it?
It's $974 million US. We're very close to a milestone that we've been looking at for a while now, which is $1 billion in terms of order executable. Our order executable also, interestingly, is not just signed orders extrapolated over the next 12 months. It is just a simple arithmetic addition of all statement of work signed. So if something's been signed only for 3 months, that's the only period that we add to. Currently, it's at $974 million, tantalizingly close to the $1 billion mark that we've been looking forward to.
Okay. So would you say that that overhang of the slowdown of the US macros has now lifted? How's the demand environment looking now? So I'm asking from the point of view that this is the time around when US clients set out their budgets for the next calendar year, that is 2024. So what is the conversation? What are you gauging from the conversations that you're having from clients? Are the macros a thing of the past? Has the wheel of a slowdown, so to speak, lifted?
No, it's clearly not lifted. And our performance this year has come despite very weak macros. As we are planning for the future, we hope to turn in robust, sustained, profitable growth. But as far as planning is concerned, we are assuming that the next year is likely on the demand front to be a repeat of this year. And I want to underline this again. Our performance has come despite very weak macros. We do not see any material uptick in demand anytime soon.
Okay. But from that perspective as well, you're still maintaining your revenue guidance for FY24 as well as the EBITDA margins for this particular fiscal. What is giving you the confidence again? I think it's due to the wins that you are seeing so far. Will that have a spillover effect into FY25 as well, sir?
No, obviously will. I mean, even if you look at this year, where fiscal year 24 that's going on, 3 quarters down, the macros were very bleak. The macros have been depressed, and yet we've turned in at the end of 3 quarters, 14.7% CC organic growth. We believe our revenue guidance for the full year, and interestingly, we're one of the very few firms that gave a very clear, explicit range for growth at the beginning of the year, and we've been able to hold on to it and to deliver on it. So as we look at next year, large deals will obviously flow into revenue numbers and will drive growth next year as well.
Okay. Finally, as far as your human resources are concerned, what is the attrition looking like at this point of time? Are you going to be hiring this year? Because I'm asking because a lot we have heard from conversations from other IT companies, they are not giving us a very clear picture about the hiring plans for this year. So can campuses look forward to Coforge on their hiring season?
Oh, absolutely. They should and they will. We are a growth firm. We are crystal clear that the number one, number two, number three priority for Coforge is driving growth. We are confident about the fact that despite the weak macros, we will again figure out a path to growth as we did in the current year. So hiring will continue and hiring will be in line with our growth numbers next year as well.
All right. Thank you so much, Mr. Singh, for having this conversation with us. All the
My
best for the
pleasure.
year that's going to come for you.
Thanks. Bye-bye.
Thank you. Thank you, viewers, for tuning in. This is Tushar for NDTV Profit.